Nigerian Senate has approved the sums of $1.5 billion and 995 million euros external loans for the federal and state governments. The lawmakers gave the approval after considering the report of the Chamber's Committee on Local and Foreign Debts on the external borrowing plan of the federal government. The 995 million euro loan, according to the government, is meant for agricultural mechanization across the 774 local government areas, while the $1.5 billion loan will be used to fund critical infrastructure in the aftermath of the COVID-19 pandemic across the 36 states and the Federal Capital Territory. Dr. Boniface Chizea joins us now to expand the discussion, which has ignited debates across the country. Good to have you on the morning show, sir. Thank you for joining us.
Thank you much for having me.
Right. Well, so as you heard in my introduction, amidst this rising public debt, the Nigerian Senate approved the external loans request for the state and federal government from President Muhammadu Buhari. Now, what are the implications of this move, given the fragile state of our economy?
Well, I think that, taking a loan is something that we should not take for granted. There are many countries in the world that want to take loans, and there are no takers, So as it is with individuals, so it is with a nation. So getting a loan is not a walk in the park. So I think that we've gotten this loan. I think the worry, the concern, besides the fact that the debt stock will seem to be mounting, it's to make sure that this money is going to be well utilized, because and how much due diligence, have we done, in approving this loan? I think this is important. But if you consider the fact that the loan was submitted to the Senate March 2020, and then it's been approved now, so I think it's about a year, it has taken a year to process and approve. But the impression out there is that this Senate is like a rubber stamp Senate and so on and so forth. So what people see, they see the final process of approval. So the Senate President, Ahmad Lawal, just he's the gavel on the table and say, they just have it. And so people have that impression that, so it's taking some time. And really, when you're talking of a loan, and you're talking of a pandemic, and you're talking about getting this loan, to cushion the effect of the pandemic. And so the pandemic is almost over, as far as we are concerned. We've now, the economy has started growing, we've exited the recession and so on. So it's taking some time. So the concern, yes, the debt is mounting. In fact, when this government came on board, our debt stock was about 12 trillion. Now it's 32. So it's coming to the level where it was, when the Kunjawala got us a debt relief. When we paid back about 12 and we had 18 as waiver for us. So I think that's the concern. The concern is that you get this loan, are you going to make sure that it's going to be utilized? And that's the challenge for us as a nation.
I mean, I did want to start on the amounts of Nigeria's debt profile. It is, as you said, more than 32 trillion, closer to 33 trillion naira.
32.22, yes.
Okay, so they're closer to 32 then. Fine. A lot of money, nevertheless.
Yeah.
So, firstly, I wanted to speak to you about the long-term ramifications of so much debt and so much borrowing in a country like Nigeria. But also, I want to take a closer look at the debt itself and look at where it's coming from. Sure, we know that it's coming from the World Bank, but a vast majority of this recent money that's been approved is also coming from the Exim Bank of China, some $17 million worth. So if we're looking at all of this money coming in from these different pods, I wanted to ask you about what the ramifications of so much Chinese debt in Nigeria really means in the long term. And like, when we look at the presence of China and its monies coming into Nigeria, it's not just this country, it is definitely across the continent. So what are the wider ramifications of so much foreign debt here?
Well, I think that the wider ramification is that if you're not careful, you will get to a stage whereby it becomes difficult for you to be able to access, more debts. Like I did say earlier on in my comments, I did say that, accessing foreign debt is not something we should take for granted. So, but if you are not careful, you get to a stage and then you begin to default. I think that also we are already having some problems. If you look at, often, we foreground the fact that our debt to GDP ratio, it's within limits. It's just been increased from 25% to 40% of GDP, under the medium-term debt strategy. And so debt to GDP, yes, okay, we say we are doing well, but what the challenge we have is the sustainability. So the revenue, it's the revenue earnings capacity for earning revenues in this country. We are challenged. If we have to pay all our debts, we will spend all the monies we earn, servicing our debts. I think that's the challenge. So going forward, the things that are about debt, you accumulate it, and you're going to leave it for those the government that's coming after you, to take care. So you take the World Bank loan; it's a 25 years repayment period. The one from Brazil, I think it's 15 years. Even the German loan is a 7 years moratorium. So this government will be over in 2023. So this just have been incurred, for the incoming governments, to worry about. So we are talking of inter-government equity. I think this is very important. So that's the challenge. But if we're not careful, like the point you raised, we'll get to a stage when then, now if we want to borrow, the cost of borrowing will be higher, because then we begin to have issues, And more so, you're talking of an economy that is not diversified. So we have an economy that's strictly tied, to a large extent, on the performance of fossil fuel. That's the oil market. And so if tomorrow we have issues with the oil market, then we're in trouble. And then people see that you're not earning monies, you're not being able to service your debts, you're no more as attractive as you are. And then what will happen is that, they get reluctant, to extend this credit to you. And it's difficult for Nigeria particularly, to function, without debt, coming into the country.
All right. So let's talk about this loan. The federal government said that the loans are meant for agricultural mechanization across 774 LGAs and support state governments in stimulating their economy adversely hit by the COVID-19 pandemic. But last year, the federal government got loans from the IMF and other loans for COVID-19 to stimulate the economy. Despite those stimulus packages, the economy is still in bad shape. Now, let's look beyond the loans and borrowing. What can the government do to resuscitate the economy?
Well, I think that a lot of things government can do. I think, first of all, we need to make sure that even the monies we get as a nation, that money judiciously spent. I think this is very important. And so if you look at the amount of money we put in subsidy of petroleum products, we've been talking about the subsidy on petroleum products, and we're saying that it's not the way to go. So whom are you subsidizing? And when you go in that lane, you find that the amount of money that has been misapplied, mismanaged, is quite considerable. And now because you subsidize the petroleum products, it becomes attractive, to take them across the border and sell them and make a killing. And so there are challenges, which I think that's one of the things that this government should do. I think that subsidies are misallocation of resources. And so you have subsidies in petroleum products, you have electricity subsidies, and so on and so forth. But going to the electricity sector, we try to privatize. And how did we do that? Those we sold the things to, were they done, at arm's length? We got funds and we sold the thing to them. And then since we don't have the capacity to manage those things, we have problems managing them. And so you put your multi-year tariff structure in place, and still you don't have the political will, to sustain it. And so at the end of the day, so you have issues. So suddenly you find a tariff is being increased by 100% across the board, and that's not good for the consumer. And so the worry is that we are not doing what we should do. There are many things we should do. The revenue base of this country is very narrow. The amount of money taxed to GDP is below what it should be. It's about the lowest in the sub-region. And so that's an area we need to look at. I believe that the tax collection, what we're getting from tax, we can do much more. Yeah, I mean, recently the controversy, God University raised the issue about printing of monies and so on and so forth. Then what are the states doing, to make sure they augment their internally generated revenue? I think those are some of the challenges. Right. So we need to get back to price tax. Make sure that this video...
Dr. Boniface, I regret to have to interrupt you there, but it is time for us to take a short break. Not to worry, when we come back, we will continue this discussion. Please do stay with us. Welcome back to the morning show here on Arise News. We're still joined by Dr. Boniface Chizea, an economic analyst, and we've been discussing the state of Nigeria's debt profile and other wider economic issues. Before we went on break there, you just touched on the governor of Edo State, Godwin Obaseki, and his criticisms towards the CBN as it pertains to the printing of money. He raised the alarm that oil revenue, for example, was shrinking, and that was a reason the government or the CBN was pushed to print around 60 billion naira to augment the allocations shared to different states in the month of March this year, that is. Though the government of the central bank, Godwin Emefiele, has since walked back on that, him and the finance minister both denied at different points that, they had printed more money or this was the claim. What is your reaction to the back and forth as it pertains to the printing of money in this case?
Well, let me say that the central bank doesn't print money. I think that's a pejorative way, to present it. What central banks, when they want to give you money, what they do is they just credit your account, and that's it. And let's put this in context. How do you print 60 billion naira? How are you going to carry it? And so I think they use the word printing in the sense that, the money is being injected into the system.
Yes, exactly. Yes. Quantitative easing.
Yes, quantitative easing. So that is being injected. But I did a paper which should be coming out early next week on the printing of currencies. And I said to myself, when Godwin Obaseki, my friend, I said, when he talks like this, I said, let's look at the counterfactual. Now, supposing, let's say for granted, I mean, the desk officer, Minister of Finance, and Governor of Central Bank have said they give loans, they didn't print any currency. Now, let's take for granted, assume that, money was, the thing was enhanced and so on, it wasn't earned. And I said to Godwin Obaseki, I said to him, that money was not augmented. And then he goes back, without having adequate resources, to pay wages and salaries, what would happen? And that's the challenge. Look, I talk to people, I discuss, and people say, depreciate the naira further, remove the subsidy. Those are like long-term issues, But you have a crisis on your hands, So you go back, say, governor, you go back to your states, and you couldn't pay salaries, and so on and so forth. And then, so what will happen? You have an ungovernable space. And when that's happening in several states across the federation, then you have, literally on your hands, you have macroeconomic instability. So I think that's what you have. And so that's the challenge. The challenge is that this country is not, with the pandemic, of course, the pandemic had just worsened the situation. So the earning capacity, I talked about the revenue inflow into this economy, and it was just dependent on oil. And so we don't have the productive base is not diversified. And so if this money is not printed, in the first place, even we should ask ourselves, what sort of federation is that we run, whereby, the state governments monthly, not occasionally, will go, to the center, federal allocation, committee, FAC, and money is being allocated. And if money is not allocated, they cannot pay salaries. And so that's the challenge. So he raises this matter. There's also the proprietary. I raise this matter when you are an insider, so you have an opportunity to, if you have issues as an investment banker, that's known, you go in and you raise some issues. There's nobody, including the governor of the central bank, the minister of finance, when you're doing quantitative easing, what you are going to have on your hands is that you're increasing money that's not backed with productivity. And so the consequences of that is that you're going to have inflation. We've had inflation in this country, it's not hidden. The prices have increased for 19 months. And so you're going to have inflation. But the thing is, you trade off when you have crises like this. So you trade off inflation, to make sure that you get the system going, to make sure that if sectors of the economy are stalled, that you kickstart them. So you have the pandemic and the economic ground to a halt. And there's no country in this world that has not done easing. Joe Biden just came in and he got an approval, $1.9 trillion, 400 and something to support activities to fight the pandemic, and each American was going to get $1,400 check. That's money being given out. What's that money? That's quantitative easing. That's money being injected into the system. So you sacrifice, the consequences is that it's going to be inflationary and so on. You're putting money in the system that's not backed with productivity. And so, but then what the bigger problem is that people out there are having some issues. They are challenged. There's crisis in the land. And so you give them this money and they have some relief. And so you worry about, liquidity, inflation, when things stabilize.
Well, I wanted to touch on a little bit about illicit financial flows. A recent report by the Global Financial Integrity Group ranked Nigeria as one of the 10 largest countries for illicit financial flows in the world. The report estimates that about $15.7 billion of illicit funds goes through the CBN. Now, we know that the CBN has put policies in place to curb the illicit flows going through the bank. One of them being that Nigerian banks have started to curtail the acceptance of foreign currency cash deposits, which has been a huge debate as to how adversely this has affected our economy. I'd like your reaction to that.
Well, when we talk of liquid financial flows, it brings to mind what's happened recently with cryptocurrencies
Yes.
and so on and so forth. When that matter was being discussed, one of the points which the governor made was that the inflow of illicit money into the Nigerian economy was of the tune of about $200 to $300 US every, I think, week or month, inflow into this economy. And you cannot, it's good for any person that has the responsibility for managing, maintaining macroeconomic stability to be able to allow that to happen. So if you have so much money, coming into your system, which you cannot account for, you don't know how that money comes in, and then it overheats. We're talking about, printing monies and so on and so forth. That's another form of money coming in. That is like, that is not back to productivity. And so you can't allow illicit flows. Should not, it's something that is condemnable. Besides the fact that it's illicit, it's illegal, is that it undermines macroeconomic stability. We're talking of price stability within your system. You're talking of managing the rate of inflation within your system. Certainly, it doesn't aid that goal in any sense. And so it's a challenge, and I think the challenge we have to live with. Nigeria is not unique in this respect. But, we have a big economy, large economy. Nigeria's in diaspora also, they send monies here.
Right.
Yes, okay.
No, but I wanted to just, is there any other form in which the foreign currency cash deposits can help? I mean, what truly needs to be done here? Because it is really affecting a lot of things. I mean, only recently, some parents were complaining that they could not even send money to their children abroad. I mean, I'd love your reaction to that.
Well, I think it's unfortunate in the sense that there are lots of people who want to send monies and you don't have dollars.
Yes.
So, we don't have dollars. I think an obvious fact is that the backlog of remittances is quite substantial. And that's why people complain. What was the rate of exchange when this government came on board? It was like 150, 160. And today, what is it? We're almost hitting, 500. In fact, we would have gone beyond 500. But for the interventions of the monetary authorities. And so when this is happening, it's a challenge. So you want to send money, you're not able to send money. And you have your wards in school overseas, and they're stranded. And so that's why when you're talking of managing the economy, talking of economic development, it's at the level of the individuals within the system. So if you are caught in that bind where you have your wards overseas, and you can't remit, you can't send money overseas, then what then do you do? It's a big challenge, But I understand also, I listened to the president, one video that went viral. He did say that this country cannot afford, to be paying school fees overseas. And so if you want to send your words overseas, so you better make sure you are in a position to make sure that you can support them, independent of what you can get from the country. So that's a terrible situation to be in. For those who are caught in it, what then do they do? I think those are some of the challenges.
Well, let's move on to food security. and talk about that. The Nigeria Sugar Master Plan, which was introduced by the government in 2012, appears to have run into some form of controversy recently over the feud among sugar producers right here in Nigeria. If you were to name them, what are the challenges the nations must avoid in order to achieve self-sufficiency?
Food security is very important, but then when we're talking about food security, what comes to mind immediately is the fact of the insurrection, the crisis, the problems all over Nigeria. I think that the killings, the kidnappings, and so on is getting out of hand. A country, if Nigeria is not careful, we might be rightly branded as a failing state. And let me put it that way. We must find a way to manage, the killings and the kidnappings, the herders, farmers crisis, and so on and so forth. We must find a way to manage it. If we don't do that, one of the consequences, one of the things we're going to face is that obviously it's already beginning to happen, in the sense that farmers can go to farm, so they cannot produce. And so if you look at inflation, like I did say earlier, that for 19th month running, inflation has been on the increase. It's about 18.33. The last time you got to that was almost 4 years ago. And that's not, across, overseas, you're talking of inflation of what percentage? You're talking of 2%, 3%, and so on. We're talking of 18%. So it's part of the challenge. And we know that food is very important. One of the things all of us know and must accept is the fact that if you remove hunger from any crisis, then the rest is, is manageable. So you have price of food that's going up. You look at inflation. They tell you compile inflation rates, what's to inflation, and you see that we are told that the major contributor to the inflation is the prices of food items. So, we are challenged. And, of course, we don't have money to import the things we should import, to make sure we keep industries, optimally operating. And we're still talking about importing food. And so it's not sustainable. And I think it's a crisis that we need to handle. I think that this nation, must accept the challenge that we must find a way to frontally, attack the insurrections we now have across almost all the federations in this country.
Right. Well, in about a minute, the Consumer Price Index, which measures the rate of increase in the price of goods and services, increased to 18.17% in March from 17.33% in February, making it the highest since January 2017, when it climbed at 18.72%, I believe. Now, what are the possible solutions to this surge? Very briefly, please. Well,
the possible solution is that people have asked, is to find a way to increase productivity. And so you find that all these palliative things that Central Bank is doing and so on and so forth is trying to kickstart. So they've done a lot in Anchor Boreas program in agriculture, and so we've attained some self-sufficiency in some aspects, wheat, rice, and so on. Is to find a way to increase productivity. Unfortunately, with what is happening now, with the prices of petrol going up, and it's bound to go up again. Like I talked about subsidies, we can't go on with subsidy. The price of power, electricity is going up. All these things contribute to inflation. So it's certainly the monetary authorities, the fiscal authorities, they have their hands full, because they are going to be challenged. And if you don't manage, if you don't get inflation under control, the thing that is bad about inflation is that it affects more, those who are marginalized. They're not in a position to pass it on and so on and so forth. So you find that your standard of living is continuously being eroded. And so they are challenged. So I think that it's something that we have to accept. That we have to do something about.
I think that's a perfect place.